Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of what companies are trying to hide in their mountains of paperwork. Today we're looking at Blackstone Infrastructure Strategies LP and a recent filing that reveals some interesting details about their recent transactions. It looks like they've been busy behind the scenes, selling off some partnership units and raking in some serious cash. So what exactly is going on here? Well, this is what's called a Form 8K, which is basically a report that companies file when something significant happens that investors need to know about right away. Think of it as a company's urgent news bulletin. And for Blackstone Infrastructure Strategies LP, the big news is about unregistered sales of equity securities. What does that mean in plain English? It means they sold ownership stakes in their fund called limited partnership units, but they did it in a way that did not require them to register those sales with the government. This is usually done when selling to specific types of investors for whom registration might be seen as unnecessary. On the 1st of September 2025, Blackstone Infrastructure Strategies LP, which we'll call the fund for simplicity, sold these units for a cool $223.5 million. That is a lot of money, folks. Let's break down what they sold. They sold Class I units. And get this, they sold over 4.5 million of them for almost $120 million. That's a pretty hefty chunk. Then there were the Class S units. They sold nearly 3.4 million of these, bringing in another $88.8 million. And finally, the Class D units. They sold about 570,000 of these, adding around $15 million to the total. Now here is where it gets a little more interesting. The filing explains that the fund is part of a larger group of investment vehicles managed by Blackstone with similar goals. Together these form something called BIGS Infra, and when BIGS Infra as a whole sold interests on that same day, the total amount raised was about $228.5 million. So our fund here accounted for almost all of that. It's also worth noting that the final count of units sold and the exact dollar amounts were locked in on the 29th of September 2025. This happened after they figured out the fund's so-called transactional net asset value, or NAV, as of the 31st of August 2025. Transactional NAV is essentially the calculated value of the fund's worth at a specific point in time used to price these kinds of deals. The filing clarifies that these sales were part of an ongoing private offering. They were sold to investors who met specific criteria. These investors are what's known as accredited investors and qualified purchasers. This means they are sophisticated investors who are deemed to be financially capable of handling the risks involved. Because of this, the sales were exempt from the usual registration rules under the Securities Act. It's a common practice for funds like this to sell directly to these types of investors. The next part of the filing deals with something called Regulation FD disclosure, which is all about making sure important information is shared fairly with everyone. Here, they're talking about the transactional net asset value per unit. This transactional NAV tells us the value of each unit class on the 31st of August 2025. It's a key number for understanding the underlying value of the fund at that moment. For Class I units, the transactional NAV was $26.38 per unit. Class S units were valued at $26.23 per unit. And Class D units were at $26.33 per unit. Putting it all together, the entire BIGS Infra operation, that's the group of funds we mentioned earlier, had a total transactional NAV of about $2.7 billion as of the 31st of August 2025. That gives you a sense of the scale of their investments. The filing goes on to explain how they calculate this transactional NAV. It's based on the value of their investments and assets minus their liabilities, all done according to their specific valuation policy. They also mention that certain expenses like organization and offering costs are spread out over several years, and investor servicing fees are factored in monthly. It's important to know that this transactional NAV might be a bit different from the fund's net asset value calculated under standard accounting principles. This is because they might not always include certain potential future tax liabilities if they do not expect them to show up when they sell their investments. So, what does this all mean for Blackstone Infrastructure Strategies LP? They are clearly actively managing their fund, raising capital by selling units to sophisticated investors. The fact that they are using private offerings and unregistered sales suggests they are targeting established clients who understand the nature of these investments. The significant amount raised, over $223 million, indicates strong demand or a strategic capital raise for new investments. The use of different unit classes, each with its own NAV, points to a sophisticated structure designed to cater to various investor needs and preferences, likely related to fees, liquidity, or investment strategies. Looking at the numbers, the transactional NAV per unit across the different classes is quite close, hovering around the $26 mark. This consistency suggests a unified and well-managed investment portfolio where different investor classes are participating in a similar investment strategy. The overall NAV of $2.7 billion for Bexinfra as a whole shows a substantial managed asset base, positioning them as a major player in infrastructure investing. One thing to consider is the timing. The sale occurred on the 1st of September, with finalization and reporting on the 29th of September. This lag time is typical for such transactions, allowing for precise NAV calculations. The mention of ongoing private offerings also signals that this is not a one-off event, but part of a continuous strategy to bring in new capital. A potential risk, though not detailed in this particular filing, often associated with private offerings of this nature, is liquidity. Investors in private funds may not have the same ease of access to their capital as those in publicly traded securities. However, given Blackstone's reputation and the type of investors usually involved, this is likely understood and accepted. In conclusion, this filing shows Blackstone Infrastructure Strategies LP actively raising capital and managing its investment vehicle. They are successfully bringing in significant funds from seasoned investors through established private offering structures. The underlying value of their assets reflected in the transactional NAV appears stable and substantial. This is a company that knows its market and its investors, and it's operating effectively within those parameters. Alright, that's our breakdown of Blackstone Infrastructure Strategies LPS recent 8K filing. What are your thoughts on these private transactions and the overall strategy? Let us know in the comments below. If you found this deep dive helpful, please give it a thumbs up. And for more straightforward analyses of complex financial documents, be sure to subscribe. Don't forget to check out our Discord community in the description for more discussions. Thanks for watching, and we'll see you in the next decode.